Hello everyone, my name is Moji. You're watching a Bitcoin Bubble News channel. I believe we've now passed the most important risk. For me, the most interesting thing about Bitcoin is how secretive it has been and how it has grown, like here in the US. What is it? 55 to 60 million people own it. The problem has turned into an election year one. When I got the crypto president going now, it looks like. Right on. What did that happen? That's why I think more Democrats came to vote for FIT. So the Financial Innovation and Technology Act of the 21st century is ready for 76 Democrats. It's strange what brought them along. Trump said what I think were three things. The first thing he was going to do was accept Bitcoin as campaign funds. Second, he was going to protect the right to keep crypto assets on your own. Extremely important to the neighborhood. Cathie Wood, CEO of ARK Invest, talks about how she feels about Bitcoin and cryptocurrencies in general. She is hopeful about the future, where the government will be less likely to get in the way. According to her, Bitcoin has grown and shown its stealthy scaling and biggest risk has been passed. She says that 55 to 60 million people in the US now own Bitcoin. In this context, she talks about three things Trump has said that have helped get more Democratic support for the Financial Innovation Technology 21st Century Act. The first one is taking Bitcoin donations for their cause. The next step is to protect the right to keep crypto assets on your own. Lastly, being against the use of central bank digital currencies, or CBDCs. Now let's watch some parts of the talk with Cathie Wood. Take a moment to show your support by giving the movie a like and following the channel. Thanks and have fun with the movie. If you look at how the stock market has been acting since the Mag 6, it's been telling you that something is wrong. That's the first thing. So I think this might be a bit more like the case from 1932, since that time it was still a tough place to live. But it got so bad that when interest rates and inflation went down, which was a problem back then, there was a lot of concentration. We were using gold as a measure, so the amount of money had to be cut down. This time too, we have been cutting down on the money supply. The amount of money had to be cut down. It was a terrible slump. It wasn't a boom either, you know. So, believe it or not, I think the situation is a bit like back then. Interest rates are going down, and inflation is going down, which makes the market bigger. Are you and I both sure that the market might go down? Between 5% and 10%. It would be silly of me to say no. I would say that our investments have worked because cash and cash cushion have been the most important factors. Traders do more than 75% of their business with algorithms. I believe they have a very simple mind. This is why the market has become so concentrated. It would be good for our strategy if computers could flip the reason they just moved towards cash and cash cushion. That's what took place during COVID. We were hit very hard on the head. Based on how you look at it, the market was down 25 to 30% in the month before COVID. We lost 46% of our money. Then we went through the craziest time in my career, which everyone knows about. I felt very uncomfortable at the end of that time in late 2020 or early 21. We were just getting huge amounts of money coming in. I knew that was going to make things worse. I told them to keep their powder dry during the hour-long show on Bloomberg. I wasn't with Eric Schatzker, who you might know. And as I knew it would, things are going the exact opposite way today. We are now at the very bottom, and our multi-omics are really bringing down the leader. Why? Since it is the technology that was first used in its development. Even though our genetics or multi-omics portfolio has been around for 4 years, it has run out of cash after 4.5 years based on market cap. It doesn't matter. It doesn't matter. It doesn't matter. The Mag 6 stands out because it's so different from everything else. To be honest, they can't even be compared. I believe that money is leaving the country. I also think that's wrong now. I feel just as bad about that. People who are selling at these prices make me think of people who were buying in late 2020 and early 21. Once the Fed realizes that the economy isn't running itself and sees inflation, I don't know if you've heard about the price wars yet. We can see Walmart, Target, and Costco, McDonald's, Wendy's, and even Starbucks all have new low-cost packages. I didn't know that Starbucks had 7% less customers in the first quarter until I got here. We can see what has happened and why inflation has been a little sticky here. It dropped from 9% to about 3% and stayed that way. Why does that happen? Because companies are losing unit growth. They are raising prices to make up for it. And the customer says, absolutely not, there are now price fights going on. It makes me think of the fight we had in the early 1980s. Milton Friedman told me, you know what, when I was still very new to my job, the rate of inflation is still high at 10% or more. Get used to it. In other news, there have been a lot more coin ATMs put in all over the world. Because of growth, the number of cryptocurrency ATMs has grown by 17.8% in the past year, hitting 38,279 of them. This is almost as many as the previous high of 39,541 ATMs, which was set in December 22nd. 2,564 new ATMs have been placed in 24, which is an improvement over 23 when 2,861 ATMs were lost. More than 82% of the world's coin ATMs are in the United States. Canada comes in second with 7%. In Australia, the number of installations has grown a lot. In just 2 years, the number of machines has grown 17 times to 1,117. Another goal for Australia is to have more ATMs than Europe does, which currently has 1,584. Along with the United States and Canada, Spain, Poland, El Salvador, Germany, and Hong Kong are also home to a lot of ATMs. Romania, Georgia, Switzerland, Austria, and New Zealand are some other places that have more than 100 ATMs. After going down the previous year, the number of cryptocurrency ATMs and their growth have picked up again in 24, thanks in large part to contributions from big operators and a wide range of locations. Let's go back to the talk with Cathie Wood. Take a look at the NFIB National Federation of Independent Business, which stands for Small and Medium-Sized Businesses. As low as it was in 2008 to 2009, people don't feel good about anything. They can't get money. You should know that the money is running out there. If you look at how people feel about the economy, I know that the big numbers say things like employment is good and inflation is bad. We don't agree with those. We have a lot of data to back this up. Consumer sentiment was hit the hardest by inflation, interest rates, and the ease of getting loans if you have a low income. So their mood is back to where it was 8 or 9 years ago. Now, middle-income people are the most important group when it comes to moving the economy in one direction or another. Mood among middle-income people, as judged by the University of Michigan, is giving up and going down. Not as low as low income yet, but it's going down. Even people with a lot of money have lost it. The rate of unemployment is going up, which is one reason. It went from 3.4% in January 23rd to 4% now, and the savings plans for consumers and the stimulus plan are over. The percentage of people who save money has dropped to 3.6%. That hasn't been seen since 8 years ago. I think it's very interesting when you peel an onion. Spreads between corporate yields and treasuries, especially spreads between high-yield bonds and treasuries, are the one thing we're keeping an eye on that doesn't seem to fit with this. Those people just showed up. Those just showed up. There are a lot of scary signs out there, and a lot of people are rushing to buy a certain type of stock that they think will do well in this new AI world. This is where the talk ends. The Mag 6 is a beautiful 6. That phrase is well known by everyone. A lot of people, including investors and experts, believe that data aggregators, which are companies that offer centralized services, will be the biggest winners from generative AI. We also think that there will be some cool features and functions in the near future, but if we're right and AI is the most revolutionary technology platform ever, then it won't be that kind of sustained progress I just talked about. It's going to really mess things up. Over time, we think the gains will go to a different group of companies than the ones that are already there. It is very interesting to live in a time when the Federal Trade Commission is more against competition than at any other time in my life.